We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the Cash Flow Pro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hey there, and welcome to today's episode of Cash Flow Pro, your daily real estate investing podcast and YouTube channel. I'm here today with Iven Vian of Anthem Capital. Anthem Capital is located, well, I say it's located, but Iven is located in Oklahoma City. So he is right in the heart of the United States, and hopefully he is doing deals everywhere. So Iven, how are you today?
Doing outstanding, Casey. Thank you for having me. Excited to be on the show today.
Absolutely, man. We're always glad to have new guests, and we can get fresh perspectives, fresh ideas, and hopefully show people how to make some money through real estate syndication or just passive investing in general. So why don't you tell us a little bit about yourself? I know we talked a little bit before the show, and like many of our guests, you have some past military experience, which, like I said, it seems like the syndication world at times needs to be called military 2.0, because it just seems like it's it's almost a direct systematic change from one to the other, especially for some high level military folks that really like performance and like to come in and do this. So tell us a little bit about yourself and how you got where you are.
Thank you, Casey. Yeah, my name is Iven. I've been in multifamily arena for now 6 years. I started in 2016. I've been investing in real estate, however, for roughly 15 years. So the first portion of that investing real estate experience was in the single family arena. But my professional background, I spent 20 years in the Air Force. Started out in the Air Force Academy in 2001 and was fortunate enough to stay in the jet. I flew airplanes, stay in the cockpit the entire 20 years. I flew the B-1 bomber for 20 years in the Air Force.
Man, that's awesome.
But, as you travel to these different bases or get relocated in different bases, investment opportunities come your way. Always had interest in wanting to have my own business someday. And I've been thinking about real estate for quite some time, and I just kind of accidentally stumbled into the investment arena. I was getting relocated to Abilene, Texas, and my mother-in-law said, "Hey, there's someone down the street going through divorce who really needs to sell her house." And I said, "Well, let me go down there and see what I can do," And I just took a chance, went down there, knocked on the door, and she's like, "Will you buy my house?" I said, "Sure." And before you know it, I bought that house for about $35,000 in 2008, which is a pretty darn good deal still at that time, and ended up renting that for about $850 a month and cash flowing about $300 a month. I said, there is something to this real estate game, and I got hooked. I got the bug, and I just started pursuing single family.
Man, that's
right
awesome.
After that, there was this house actually next door to where I was living in Abilene, Texas. It was an abandoned house. And this story is always interesting because it did get me in some big trouble. So my wife was in the hospital with our first child, and we quickly had to rush out the door. So she said one day, go home and get the bag that we need for clothes and everything. So I go home to get the bag.
I can see where this is going real quick.
And then I see next door this boarded up house that's been there for a while, and I'm like, what is going on here, right? And so I found the owner of that house and went straight to this house. I looked it up on the tax roll, found his address, went straight to his house and knocked on his door. And I said, "Hey, what's going on with this house?" He told me. I was like, "I want to buy it." He said, "Step on in." Long story short, I bought that house that day as well, although I was late getting the bag back to my wife. But she later forgave me after some apologies, this and that. But that house made a lot of mistakes, but I learned a lot along the way that helped me later on in my real estate experience. And one big lesson learned is that you don't have to reinvent the wheel. I didn't have a mentor at the time. I simply was just going off the cuff, which is not the right way to do things. Get a mentor. Find someone who's gone before you and has paved the way. And if they have proven track record, proven results, and probably what they're doing, the actions that they're doing are actually good, right?
Yep.
And then emulate them, model them. And so I ended up getting a mentor eventually. And through this mentorship program, this is where I learned about the multifamily arena. And so I realized I always wanted to be a multifamily. It just made much more sense. The economies of scale and the fact that you have this thing called forced appreciation, where if you improve the income stream of a multifamily asset, the property goes up in value by
Yep.
multiples, right? Whereas a single family property, you're limited by like kind property selling in the current market it is in, right? And
Yep.
so you
That's right.
can't force the value beyond what the comp is selling for, right? And I
Yep.
was like, wow, this is powerful. I want to do this, but I honestly didn't have the belief at the time. Even though I had mentorship, I didn't really believe in myself that I could do it. I didn't make a whole lot of money in the Air Force. And so I continued to buy single family properties. And I moved to Oklahoma City in 2013. Um, Joined the Air Force Reserves, was a full time reservist, and began pursuing single family at that point again, and ended up getting about 30 homes. And then I got my real estate license to help me earn capital to buy additional houses. And man, I was just hungry, you know. I ended up selling 99 houses in 2 years. I put all that money back into my single family and built up a decent portfolio of about 30 houses. And uh, right, one of my first clients as a realtor, who's now my business partner, he and I just hit it off. And I was sharing with him the multifamily model and how powerful it is. And I remember the story. I mean, we're in this abandoned home one day in winter time frame, trying to pencil out a deal, and the deals just weren't penciling out anymore. And I was like, "What are we gonna do?" You know? And he's like,
Yeah.
"Remember that multifamily thing you're talking about?" I was like, "Yeah." He's like, Let's go check that out." And so we went to an event in Dallas in March of 16. Signed up with this mentorship program. His name is Brad Sumrock, and hit the ground running 2016, and haven't looked back ever since. So year to date, been in multifamily for 6 years. We have done roughly 19 deals, about $300 million in real estate transactions. We've raised around 65 million in equity, and we're currently pursuing more opportunities as exiting. Currently have 9 exits, and by end of the year, we should have about 13 exits. So now I
Wow.
do this full time. This is a full time career. I've learned a heck of a lot all along the way, and be happy to share some of those lessons learned.
Well, good. So, do you still own any of the single families to this day?
I do not. I do not. Everyone has their reasons. For me,
Yeah.
I believe there's riches and niches.
Yep.
Find one model asset class and get really, really good at that and scale that.
That's
I
right.
try to do all the things, and I have a few more gray hairs. You can't really see them, but
Yep.
I got tired. I got burnt out. I was like, and it just wasn't worth the time anymore. So I
Well,
gave up
you mentioned economies of scale, and
that.
that's so. It sounds like a super MBA term, but or sounds like a super high level business term, and it really just means like bring something to you that you can scale rather than having everything kind of fragmented. You know what I mean? And single families, that's the same problem I had with single family. Was it just so fragmented? You know?
So fragmented, and I mean, exactly. Say I have a 100 unit apartment complex, one location, typically one manager, one leasing agent, two maintenance people managing one asset worth millions of dollars.
Yeah.
Or I have 100 homes in multiple markets, and you have to have a pretty good operation to create efficiency with the 100 homes not centrally located around each other, right?
Correct.
And
Yep.
and again, the amount of work it takes to buy a 100 unit complex eventually over time is less than it takes to manage 100 homes or buy 100 homes one
Oh
at a
my
time.
gosh. Yes,
You manage
Lord,
one.
yes.
And there's a lot of ways. When people do buy portfolio of houses and they give it to a property management company. But from an economy of scale standpoint, simply the more you buy something, the cheaper it is, and plus operational efficiencies, right? I mean, from a
That's
very,
the
very,
key right there,
very
operational
high level
efficiencies.
perspective, right? And
Yep.
and for us, we don't do vertical. We're not vertically integrated property management company. We hire out to third party property management companies. They take care of the day to day operations, and we're asset managers. We manage the property management company to make sure we meet or exceed at the end of the day our investors' returns, and that's really what this is all about. If you're a
Yep.
capital raiser or you're investing other people's money, your priority is to make sure you hit or meet or exceed the investor returns. But so, but again, that forced appreciation component to the multifamily uh, investment opportunity asset class is so powerful. Not only are you just buying a building, you're buying a business inside of that building and you're proving the value of that business, right?
Yeah.
Also the value of that building. And once you improve the income stream by raising your rents, improving your revenue, and or lowering or managing your expenses to improve your NOI and net operating income, the value of that business, the value of that building goes up tremendously,
Yep.
right? Much more so than it would for a single family.
Yeah. And the thing that I've always liked about multifamily over single family is the idea that you can get additional income streams from whether it's washers and dryers being rented to units, or whether it be covered parking, or whether it be fitness center, whether it be pool and arcade hall for the kids, whatever. Anytime you have people bunched up in one spot, there's always the idea that you can get alternative income streams from the same bunch. And while improving everybody's lifestyle. Do you know what I'm saying? I mean, you give the kid $10, send him to the arcade, and there you go. And again, it's good for everybody. So, but when you started exiting, so your first multifamily deal, was it a syndication? Like, did you bring on investors, and
It
if
was.
so, what's that?
It was, yes.
It
Yeah.
was okay. Was it a 506B or C?
That was a 506B at the time.
Okay. What are you doing right now? C?
Mainly C's.
Mainly C's. Where do
Yeah.
you where are you getting a stream of potential investors? Like social media, or are you just still talking it around, or using old lists, or buying new lists, or what are you doing there?
All of the above.
Okay.
We have started off going to a lot of investor meetings and events over time. I've built up a pretty hefty investor database. Um, and but today, I mean, we're building out a whole new back end, LinkedIn leads, Facebook, social media leads, but it's more about the friends of friends, kind of idea as well, right?
Sure, sure.
And really, like, the best way to get a lead is perform on the ones you have, right? Like with the
Yep.
current deals and assets, and so really focused on home base and taking care of home base as we're going out trying to find you know new investors. So that's kind of a mindset thing, right? Um,
Yep.
but yeah, but speaking to someone, say first starting out, which this was my case, I didn't know anybody with millions of dollars, right? And and so I had to go find somebody who already had an investor database, and I
Yep.
brought them into my first deal as a co-investor or general partner, they call it, right?
Okay. Yeah.
And I leveraged their investor database, and they brought in a majority of the equity that way to help us close our first deal. Our first
Okay.
deal equity raise was about a 2.6 million.
Oh
Um,
wow. That's pretty good.
mhm.
Did you have like a 50,000 minimum, or?
Sure, that was 50,000 minimum. That was back in August of 16. So I'm trying to remember, but yeah,
So you
typically
all
our
just go, do you set up like the booths at conferences, and you do meetups, or you go to meetups and hand your cards out? I mean, just basically like all of the old school kind of techniques. I mean, or at least you said a little bit of all of that. And so I'm assuming that's kind of the way we're looking here.
Well, again, this is a evolutionary process. You learn as you go, right? So
Yeah. Yeah.
that's how I got started, right? But it's not my vision for tomorrow, right?
Sure, sure,
Because
sure.
like traveling gets old, and we all have other responsibilities, and you can't always be gone from home. So how do you increase your investor database, right? Well, by being on this podcast, I can
Yep.
increase my investor database. If I can add value to others and it benefits others, then maybe they have an interest in what we do and who we are, right? So
Sure.
that's one, you know, other people's platforms. Additionally, there's a whole digital media arena out there. Learning how to leverage all of the digital media tools you have access to, right? So creating your whole online presence is so important, and
Yep.
keeping that omnipresent, if you will. So many different channels that you can do that with. Of course, there's email, there's YouTube, there's Facebook, there's LinkedIn, right?
Yep.
So many different ways. Creating a presence and treating this as a professional company that you want to have a brand. You want to have a brand, an image. What do you stand for? Make sure you do your back end uh, strat house planning of what is your values, what is your mission, what is your vision, what are all those things? Because what is your overall message you want to convey to your investors? All of those things come out through all the different uh, various ways to share content, right? And so
Yep.
when you take it on as a full-time business mindset, those are the things that you need to be doing, and those are the things that will help you increase your investor database.
Yeah. Yeah. And again, and yeah, I didn't think we were gonna unearth any just completely mind shattering techniques that you have this just waterfall of new people that are just drooling to hand over money. I really, man, just like it's just goes to prove like just the old school methods, the ways of just churning. And again, like you said, it's a grind. You bring in a new co-GP and then you talk to their investors and you try to couple everybody up and get everybody into one get the same idea into everybody's head and then move forward from there. Um, Now, how many doors do you all currently have under management?
I think we're now just over 1,000 doors. We've had up
I
to
mean, that's pretty good
1,500 doors, but
considering.
yeah, we're in that plus up stage where we want to scale now to the next level and
Sure.
formalize companies or build. We have a whole organizational chart of people we're trying to fill, and create in-house construction management um, and so on and so forth. So, but roughly
Are
around
you
1,000.
looking to are you looking to vertically integrate at some point as far as property management and so on goes?
Questions on the table, but what I look to do is find a property management company that we can vertically align with, that
Yeah,
we can partner with, and then they can have equity participation or
sure.
participation participation in the compensation on the back end, or whatever it may be, to keep our interests aligned that way.
Yeah. Well, and that makes sense. I mean, it makes perfect sense that and I've oftentimes wondered if that's not more profitable or not necessarily profitable, but more beneficial for the investors if somebody because one issue that I've had recently with just an alignment of interests type of a scenario is when the actual syndicator owns the property management company. It just whether or not obviously there's you want to present an idea again an alignment of interest with your investors that hey, we hired these folks, this is a completely separate entity, I don't have any interest in the profitability of this entity, and we're going to do that. But then there's also the idea that, hey, what does it cost to start a property management company that we can run at a break even for our investors? So, it can go one way or the other. It's very keen of it needs to be a very keen idea of the investor to do the due diligence and see if the alignment of interests of both parties, syndicator and property manager, are in alignment with their own ideas. So with 1,000 doors under management, what's the geography of that look like?
Yeah, we're located in Dallas, suburbs of Dallas. We're in Salt Lake City, Kansas City, Orlando. We have had assets in Oklahoma, Arkansas. Not afraid of the secondary, tertiary markets. Um, but currently, to date, we're in the primary markets of Dallas, Orlando, Salt Lake City, and Kansas City.
Man, those are some pretty hot markets right now too. As of this recording, probably some of the hottest. Dallas is as hot as I think it's ever been. Um, as far as multifamily goes, you got Dallas, Austin, San Antonio. That whole area is just like kaboom. It's just nonstop. Um, Hi, this is Casey Brown, host of the Cash Flow Pro podcast and YouTube channel. Have you been thinking about investing in real estate but just don't know where to begin? I'd like to help by inviting you to check out our website at www.3000capital.com. There you will find an array of material that will help you learn all about real estate syndication. And while you're there, be sure to check out our free video series download titled 5 Must-Know Keys to Success in Passive Real Estate Investing. I'd also like to personally thank you for making Cash Flow Pro part of your day. Now, back to the show. The idea that, so the geography, so obviously you have different property managers in different areas, right? I mean, obviously it's not one company that
Yeah,
has
not one
spots in those
company.
different areas.
Not, not one company. Typically, we like to find a property management company that is home based out of the
Yeah,
market you're operating in. Typically, it's not a must have, but a nice to have or like to have kind of thing. So in this case, we have a property management company that is based out of each of the markets that we're in, um, or they have a strong presence already there, right? What,
sure,
what we
sure.
don't like to do, which we've learned the difficult way is, say, a property management company is successful in their primary market or a few primary markets, and you want to enter in a new market. Then leveraging the processes. We could say they're very strong and they operate really, really well, right? But
Yep,
entering into a new market without a presence there is a very, very difficult thing to do. I would
yep.
highly advise not to do that. And moving forward into the environment that we are in, where you have to hit on all cylinders on these deals in order for them to perform well, and you have to have your processes tight, your operational efficiencies in place. It is so important that you understand how your property management company will perform, and you have to
Well,
validate
those things can just get
that
away
down.
from you real quick. They can get away from you, and if the wheel starts getting wobbly, I mean, it's tough to get that thing jammed back on there and keep going.
It's daily,
Yeah,
hourly. You have to stay on top of these things. So, I have a back end support team, asset management team. I have a lot of eyes looking at our stuff on an ongoing basis. There's a whole lot of back end admin things that no one talks about, the non sexy stuff that no one wants to talk about that has to happen,
yeah,
right? But
yeah,
even having all of those processes down to a T is so important in today's environment. You cannot miss a beat in order
yeah,
to get these um, deals to perform. And moving forward into the environment we're moving in with rising interest rates, and but still pricing being relatively strong, you have to hit these numbers, or
yeah,
you're not going to have a good deal. And we've been lucky, or we've been grateful enough to have a strong market where we have still very good tailwinds. So those that did not have operational efficiencies in place were still performing and turning over a 20 plus annualized return to their investors, right?
yeah,
But
yeah,
but you'll see who the true operators are here soon when things tighten up even more so.
yeah.
So that's
Yeah,
where my
I mean, well, and you'll see who the true negotiators were too when things tighten up because, and it's tough to underwrite some of these economic conditions that are uncertain. You know what I mean? I mean, like I said, we're not all. I've said it many times on this podcast. We're not all that many years separated from the time when people just were like begging residents to move in some of these multifamily deals. Like they went out there, they built them, and they had a build them and they will come mentality. They went out and built them, and then nobody came, and everybody was like, "What do we do now?" And
Mhm.
so that's what I'm getting at it's going to be increasingly difficult as we move forward. I think as the cap rates continue to compress, the idea that something could be not profitable from the very jump, and then you have to try to jam it into profitability. And there's some of that stuff that's really kind of scary, I think, to a lot of people out there right now.
Well, uh, I hear you. Yes, but I take a step back. The fundamentals are
Okay.
still there and stronger than ever. Okay.
Sure.
One,
Sure.
one, this market we're in, we're well undersupplied,
Yep.
right? Secondly, the affordability gap for single family homes continues to widen. It is more and more difficult for first time home buyers to buy their first home or get into a personal residence that they would own.
Yep.
That right there, lower supply, more demand for multifamily. So there's increased demand. So that will still continue to drive rents. Probably not, I mean, not at the rate we're seeing. There will be downward pressure. I mean, we have inflation taking place and gas prices. I mean, my home stay right now is almost $5 a gallon. And that has an impact on how much money people have available to pay for rent. Right.
Yep.
However, the fundamentals are still there and are still strong. I think as long as you and your investors understand who their operators are and understand that they're truly, in fact, making a very conservative assumptions, then I would still feel comfortable investing in multifamily. I do
Sure.
myself, and I
Yep.
will continue to do that. And knowing the tax benefits, the fact that this is the last year that we can realize 100% bonus depreciation on our investment, and then
Yep.
it will go down by 20% each year thereafter.
Yep.
That's a tremendous opportunity. Typically
Well, and
it's
I think it's
60.
all giving way to some of this. It's all giving way to some of these price increases too. I mean, there's and depending upon everybody's agenda and what they have in mind for their money or their investors' money, that's what's. I mean, it's definitely you're exactly right. I mean, and that's the reason I bring up the word uncertainty is the very reasons we just talked, or the very reasons you just brought up, and I just brought up. On one hand, you're looking at all of these factors, and then on the other hand, you're like, okay, in reality, the fact the factors are mitigated by everything you just said. And so when you start looking at it like that, man,
Yeah,
it's like,
exactly. Like
you know,
there's inflation, no doubt, right? And
yep,
double digits. However, rent growth has been tremendous.
yep,
So, like, multifamily is a good hedge against inflation. It's still a good investment to be in. Fundamentally, it will always be. It is, but again, when you get down to the granular perspective, that's where you need to understand these nuances that I'm referring to. But from a high level, it is the space to be in, and it will continue to be.
yeah, yep. Well, good deal, man. Well, listen, we're running up on our time here, and there's a few questions that we ask every guest that comes on the show. And first of all, I want to thank you for coming on the show today and sharing the knowledge and the stuff that you all have going on right now. And we really appreciate that. But the first question is, what is the best book that you have recently read or are currently reading?
Best book as yeah, one called a book called As a Man Thinketh, and it's really good. It's this space, this game we're in multifamily, a lot of business arenas. It's all about mindset and having a right, true perspective of
Sure.
things, and so that book has really helped me learn who I am at a deeper level to give me the right perspective of what I'm capable of doing, and it's encouraged me to go out and do more.
Yep. Yep. Well, awesome. All right. Next question is, what is a dream vacation that you have either taken or hope to take?
I tell you what, this business has allowed me to do some really cool things. I'm very grateful for it. Went to South Africa last year
Oh man.
on a dream hunting experience. This next month, July, I'm taking my family to Spain. It's going to be tremendous.
Oh man, both.
And watching the running of the Bulls.
Oh my gosh, yes, both very, very, yes, on many levels.
You love to
Yeah,
travel.
the South African hunting trip is definitely on my bucket list. I have a lot of, when I ask that question on this show, I have a lot of things that are on my bucket list, and then as well as I've had to add a bunch too. So my bucket list is like overflowing, and that is definitely pretty deep in there. So, all right. Well, listen, I'd like for you to tell the listeners if they've heard something that resonated with them today or something they want to get some more information from you about, what is the best way for people to reach out and get in touch with you?
Absolutely. Yes. Please come find me on my website, anthemcp.com. There you'll see a contact form or contact link. Fill out the contact form and set up a call or and for us to get to know each other.
Good. All right, Ivan. Well, thanks again for your time. We really appreciate it. And listeners, as always, if you don't mind, to go and leave us a 5-star review and subscribe so that you do not miss any episodes of Cashflow Pro. I want to thank everybody for your time, listeners, for listening. Ivan, thank you for your time, and I hope everybody has a wonderful rest of the day.
Thank you so much, Casey.
Cashflow Pro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.